are you still struggling to build a profitable portfolio in the Nigerian stock markets? So here I want to show you my playbook. So this video will show you how I make 3 to 5 times more money trading Nigerian stocks. So you will see the simple profitable playbook that I use to trade Nigerian stocks. So these are just set of rules that I follow. No extreme or no complex um, metrics, simple, but has helped me to grow my portfolio at least 300 to 500% per annum in the Nigerian stock market. And then you will see four stocks I recently sold in January alone. Now, although I've heard them from uh, last year until January. So, but then I will be using them to share some of my rules and also principles that has helped me to make more money. So, and I think you also find them useful at the end of this section. So here is a disclaimer. So remember, every idea I share in this video, they are based on my personal research and calculation. Kindly do your due diligence before you invest in Nigerian stock markets. And then note that Nigerian stock market comes with a lot of risk due to uncertainties, stock price fluctuates. So please don't think that because everybody's making money, then you want to jump in. Please do your due diligence and also vet my recommendations based on your risk profile. Now, being profitable in the Nigerian stock market is not an overnight success. It requires patience while following the blueprint of traders and investors with track record. You know, one of the things that was missing when I started investing in Nigerian stock markets through my years of research, and then I was still reading books, was that it was difficult for me to find someone who was successful, who I can lean on, who can show me. You know, everybody just tout themselves as stock trader. You know, I make money, I make money. Oh, yeah, show me your portfolio, show workings. It's difficult. So, but then I just realized that if I have to make it in this market, now I'm going to use a combination of experience and foreign books. So I order books from US markets. I buy most of my books from Amazon, and as well as my experience also taught me there are things that I know today that I couldn't have learned if not the experience that I gain in the market. Some of them cost me money. For example, being patient in the market actually cost me money. I remember when Okunu oil was selling for like between 12, 13 naira or thereabouts. And then I bought the stock, couldn't wait. I was impatient and I was like, wow, this stock not moved. And the moment I sold it, it was like the stock was waiting for me. I sold it, it started picking up. So these are the kind of things that you can only learn if you don't make mistakes in the market. So here you see some of my blueprints and then how I'm able to grow my portfolio year on year. No overnight success, just a playbook that will help you to improve on your portfolio. So in this video, I will share my personal playbook and how it helped me earn 3 to 5 times more money from Nigerian stock. Now, one interesting thing that I always hear is that Nigerian stocks are not profitable. Whatever you make in Naira terms will be wiped out by inflation or exchange rates. So let me tell you the truth. I like to work with data. Let's not always assume. Let's not just jump into conclusion. See, even if Naira depreciates, even if dollar appreciate against the Naira, the truth is you can actually outperform that exchange rate depreciation if you follow the principle that I'm going to share with you. You can outperform exchange rate fall. Let's look for instance. Let me show you something. Look at the depreciation in dollar to naira, USD, NGN in 2024. So exchange rate in 2024. So let me show you 12 months figure. All right. So in 2024, we had a 74% appreciation of dollar against the naira. That means naira dipped by 74%. So naira opened the year at 881 averagely in the official market and then closed the year at 1,531. So from 881 to 1,537 averagely. Now that's like 74%. So meaning that if your portfolio, so that's actually outperformed the NGS. So the NGS itself did an average of, let me see, ASI. The NGS itself returned 37%. You can see 37% in 2024. So that means that if you had probably bought the dollar to keep in January and you sold in December, you would have earned 74% on that money. Now, if you had bought NGS index, so assuming there's an index that tracks all the stocks listed in the market, you would have made 37%, which actually underperforms the exchange rate itself. But if you have traded stocks based on the model that I teach, you would have made a lot more money in the market. Those that followed me in 2024 can attest. At least there is a video, and please, I want you to watch this video. There's a video, I intentionally did this video, and I used to take feedbacks, and it's going to be an annual thing. So here, where I gave my members an opportunity to share feedbacks on how they made money in the Nigerian stock market. So here, how we made money in the Nigerian stock market. Go listen to this video. So if you follow the stocks that I've recommended from January to December last year, and you are able to compound those returns, you would have outperformed 74%. After all, one stock alone, like Mansard, is doing over 100%. Look at Mansard. Early last year, I mentioned Mansard as a dividend growth stock. And I told them to go buy. That was around, I think, mid last year or thereabouts, between June to August, to go buy Mansard between 4.9 to 5 naira. Look at Mansard today. Mansard had topped close to 10 naira, although at 9 naira, almost 90 to 100%, meaning that you would have actually outperformed exchange rate of 74% and also a NGS index. Now, imagine that you can actually average 20 to 30% every quarter for 1 year. That means you can actually hit close to 150 to 200%. So if your portfolio can do 150 to 200% in a year, what is 74% depreciation of the naira? You have outperformed the USD. Again, what is 37% of NGS? You have outperformed. So you can actually trade the market, outperform dollar, as well as outperform the NGS. But then it doesn't mean buying dollar is not good. I do it. So it's good you have a diversified portfolio. But the whole idea is to let you know that Nigerian stock market is very profitable if you follow the playbook that I'm about to share with you. Now, warning, please. The stocks I mentioned here are not buy recommendation. They are already above my entry region. So whatever stock I recommend here or I discuss here, they are just for the purpose of this education, not a buy recommendation. So my personal playbook in the stock market, this is what I do. This is what I do. So please follow this playbook. It will help you. This playbook will help you make good money. You will earn 3 to 5 times more in the markets. Now, the first one, I always have an objective. When I buy a stock, I don't buy a stock as a gambler. I don't buy a stock without having specific objective. Am I buying the stock for trading or investing? Because the way you behave, your attitude towards a stock as an investor is different from a trader. And I've said it multiple times in this community, in also my YouTube channel and multiple videos that I've shared right here. When you trade a stock, you make more money from share price appreciation and you lose when share price dip. So one of the things you should be watching out for is demand and supply, because it is demand that drive price and supply also drive price. So when you are trading a stock, you must learn how to read demand and supply, interpret demand and supply, volume in the market. So no matter how good you are in fundamentals, earnings per share, earnings before interest and tax, all those financial calculations, if you don't know how to interpret demand and supply, you will not make money in the market as long as trading is concerned, except you want to leave your stock for long term. A lot of us have made money in the market because we were investing, thinking that we're trading. Okay, you bought a stock 5 years ago, and the stock has moved from 1 naira or 2 naira to 24 naira. Now, 5 years ago, that's investment. That's not trading. That is investment. Now, you will now come back and say, oh, I made over 400% in the market. So let me teach you how to trade. Why are you deceiving people? You're not a trader, you're an investor, because an investor lives. If they ask you to buy a stock that will go up in the next 3 to 6 months, can you do that? Can you repeat that process? So many of us need to know our personality, need to understand our risk profile. Some of us are good at investing. I've reviewed portfolio many times, and I've seen people do well in investing. I've seen people do 3x, 4x, 5 years on 5x on their investments because they left it for 3 to 5 years. But when they move into trading, they lose money, thinking that it's easy to repeat that kind of return. So know whether you are investing in a stock or trading. When you are investing in a stock, share price appreciation today should be should be of no significance. Like you shouldn't be worried. After all, you're not supposed to check your portfolio every day because you have invested. Your plan is to hold the stock for a long time. So when I'm trading a stock, I have a mindset that okay, I'm going to hold the stock for the first 3 months minimum, and then I'll move into 6 months and then into 12 months. As long as their fundamentals are okay. As long as their fundamentals are okay. So first thing is when I buy a stock, first I want to define my objective. And my objective is trading. Oh, I want to hold this stock for 3 months, 6 months to 12 months. That's the first one. Now, the second one is I don't chase stocks. I don't chase stocks. People will just come to me in my DM, very full my email. Oh, what do you think about this? What do you think about this? What do you think about this? I don't respond to such questions again. I already have a list of stocks that I'm following. Except a stock passes through my checklist, it cannot be in my watch list. So it has to first go through my checklist. It's only when it's qualified that I'll put it on my watch list. So don't think that I have all the stocks under my radar. Some of you today, you just think of Access Bank. You start analyzing Access Bank. Tomorrow, you just think of Nestle. You start analyzing Nestle. Is that how to trade? You don't trade like that. Don't chase stocks. You don't chase stocks. That's why I have a course called the ETF strategy. ETF strategy helps me focus on quality trade setup or investment opportunities that offer good returns above inflation. I only focus on quality trade, quality investments. If it doesn't pass my ETF, it's not a quality trade. So in summary, I trade like a sniper. I focus on few watch lists. If I tell you that the stocks I have in my portfolio, so the stocks I have in my watch list right now, they are just less than five. Yes, less than five. Because I don't chase stock. These are stocks that have gone through rigorous check, and I'm just waiting for one or two things to happen before I call them a buy. But you can't see me analyze. I don't want to be overwhelmed. So that's how I trade. I don't chase stocks. I allow a stock to come to me. Once a stock comes to me, I take a hit. That's it. I have a stock I just recommended today. Now, I've been watching the stock for like 1 month, 2 months. Now the stock is now on my buy recommendation. You can see following a stock for 1 to 2 months until setup is complete before I jump in to buy. That is how I trade the market. I don't chase stocks. Allow your stocks to come to you. It is only when you don't have a strategy that you chase stocks. But when you have a strategy, you will see that you naturally watch your stock come to you. It's like a net. Should you be chasing fishes in the river? No, you just cast your net and wait for them to come to your net. Once they come to your net, that's it. Because if you start chasing, you will not catch anything. So think like a fisherman who will just cast these are nets in the river and then wait for the fish to come and then you pull it out. So your strategy is like your net. When you cast it in the market, you now wait for stocks that meet that criteria to show up on your screen. It is that stock that you will buy. I have less than five stocks in my portfolio right now, and these are the five stocks I'm waiting. I only take quality trade, and quality trade will give you good returns in the market. So my ETF strategy helps me focus on quality trade setup, investment opportunity that offers good return. E for economic events and macro, sorry, economic data and macro events. That means the stocks must benefit from macro events. T for technical analysis or price action. This is where I find stocks that are selling at a cheap price. This is where I find stocks that are extremely cheap, stocks that are at the bottom, stocks that have been beaten down. There's only one reason why you buy a stock, because you believe the stock will go up. But there are multiple reasons why you sell a stock. It's not necessarily that the stock is bad, but because you feel that number one, investors have sold it because they want to take profits, they want to swap, or they want to divest. So when you find a stock that's been beaten down because investors have sold off, not because the stock is bad, that is where the opportunity is. So in the ETF, I will teach you how to find good stocks that are suffering, good stocks you can pick up at a cheap price. And finally, you will now see the fundamentals of the company. Companies or stocks with good fundamentals, companies or stocks with good financial statement that have been releasing consistent growth in revenue, profit, and EPS. So when all these things are in place, you are most likely going to pick a very good stock in the market. This is what I used to find a stock that will be on my watch list. If a stock does not pass through this ETF strategy, you will find it. Just like I say, I only have five stocks in my portfolio. So we actually hosting our next batch of the early trader course in February next month, and it's 450,000 naira. We also allow instrumental payment as 475. So if you want to join us, you can actually go to send a message to glofolo limited at gmail.com. So glofolo limited at gmail.com. globaltrader.com. You can also drop a comment here. I'll respond to your comment for if you want to join the early trader course. Now, here are the three profitable stocks. I mean, four that I've sold in January for between 50 to 100% profit. First one is Ikeja Hotel. These are the stocks that I picked through the ETF model. If you watched my video on Nigerian stocks to buy in 2025. This video here, where I mentioned best Nigerian stocks to buy in 2025, go watch this video. I mentioned Ikeja Hotel right here. You can go watch. If you are yet to watch this video, go and watch it. I mentioned Ikeja Hotel right here. And then you can see Ikeja Hotel had moved from 7 to 8 naira to 13 naira in just 3 months. That's what 62.5% return in the market. Now, I also mentioned name insurance on this particular video, how to make it, how to invest and make it fast in Nigerian stocks in 2025. I also mentioned NEM insurance right here. NEM insurance has moved from 8.3 to 8.4 to 13 naira in just 2 months. That's 54%. So I can tell you that trading stock is not difficult. Trading stock is easy if you know what to do. People that have passed through my ETF can tell you categorically that this is a money-making course. It's not a course where you come to learn. It's a course where you come to make money. Because during our ETF section, October batch, I mentioned some stocks that are doing extremely well in the market today. In our June batch, where we started, I mentioned stocks that have gone from that are making close to 100, 150%. UACN, Unilever, most of the stocks you see pick up or on top gainer today. If you go through my ETF course, you will see when they will buy. There is nothing like knowing the period within which a stock is a buy. There are stocks that will give you 1 week window. That means in the next 7 days, they are giving you opportunity to buy. There are some that will give you 1 month window. There are some that will give you 2 month window. Let me show you that of Mansard. Look at the buy opportunity of Mansard right here. It was between June, 7th of June, 2024 to September. So you can see that you had June, July, August, September. You had 4 months to mop up Mansard within this period before you moved. So now the question is, how do I know the period when a stock is a buy or not? This is what I teach in my ETF class, especially under the technical and price action. You will know the period. All the stocks that have rallied in the market today, you will know the period where they were flashing buy, 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 buy. But because you didn't hear it, so imagine a stock staring at you and the stock is telling you, buy me, buy me, buy me. But because you don't understand the model, now you are thinking, oh, this stock is expensive. The stock is high. Like the stock I posted yesterday slash today. You might think, oh, this stock is really expensive. But you will watch the stock move just like Seplat from 1,000 to 5,000. And a lot of stocks are struggling to do 5x. But Seplat has done 4 to 5 years in the last 1 to 2 years. So the idea is understand the timing in the market. Look at Honeywell, the same thing. We keyed into Honeywell when Honeywell was selling for between 3 to 4 naira in the market. Now, see Honeywell right now. This is Honeywell stock. You can see here, we keyed into Honeywell when Honeywell was selling for around 4 naira. And if you go to my recommendation on Bluefolio, you will find them. My recommendations are transparent. That's why I make them available online. If you go to bluefolio.com, you see it. My recommendations are transparent, easy. So I intentionally post them an entry price so that you can use that to check. Just like I tell you, remember, when you join my community, go check the past recommendation. That will help improve confidence in the market because you see that a lot of stocks that were recommended have done extremely well in the market. Even if the market is going down today, you will see we will still pick good stock in the market as long as they pass the ETF checklist. So this is what I teach in my ETF. Finding stocks like this, finding stocks that are trading at the bottom of the market, something you can pick up at the bottom at a cheap price and then sell them. So that is what my ETF model does. I don't chase stocks. All these stocks you see me mention, they came to me. They showed up on my screen before I bought them and now see what they are doing in the markets. So if you want to be profitable in the market, whether in a bull period or in a bear period, apply, just enroll for the ETF course. It will change your perspective about trading. You will see here with confidence. With confidence, no matter your capital, the confidence level will increase because number one, you're not going to be chasing random stocks. Number two, you are waiting for the best setup. And when it shows up, you go big in the market. Now, the third one, I hold stocks for 3 to 12 months. Many of you will just buy a stock today. In just 1 week, you are shivering. Oh, the stock is down. The stock is down. I don't know. If you cannot be patient enough to hold your stock for 3 to 12 months, then you are not ready for trading. In trading, you don't buy today and sell tomorrow, except the stock reaches your profit targets. So some people see trading as if you are just in the market buying and selling. Buying. No, when you trade a stock, my own definition of trading is swing trading. I can hold a stock for like 3 months, 4 months, 5 months. So even when you're working, you can actually buy a stock that without having to monitor it every now and then. You can even come to the market every weekend when the market is closed, look at your portfolio and then go to your business. So it's not enough to buy a profitable stock. Strategy reviews what to buy. The ETF I shared will only review what you should buy. But it is your patience that is very important, because if you are not patient, you won't grow that money. It is patience that lets you to grow that money. It's like planting a seed. So your strategy will tell you the soil that you should focus on that is best good for that seed. But if you don't water that seed, it will not germinate. So your patience is like the water. You're waiting. Now, don't just wait randomly. Don't just wait anyhow. You don't also struggle to wait. In patience, you don't struggle to wait. If you find yourself struggling to wait, then you're not patient. Even if your stock is going down, even if it's a top loser, I have bought a stock that was a top loser, but yet it bounced back because I did not buy the stock out of thin air. It was not a guesswork. I followed a detailed roadmap. I followed a detailed blueprint before I bought that stock. So all the stocks you see me mention here, I followed a blueprint. Even when they dip, like if you look at Mansard, Mansard dipped at some point when I bought them. Now look at Honeywell. We bought Honeywell, we went to this, it pulled back again. I took some profit, I held the remaining one, and I see what happened up again. So you must follow a detailed blueprint. You must follow a detailed blueprint. That is where your patience will come from. Because eventually, if that stock dips and you go back to your playbook and you ask yourself, why did I pick this stock? And then you see that, okay, it's benefiting from economic events. I bought it at a lower price and the fundamentals are okay. So why should I sell? That automatically will even improve your confidence and make you buy more on deep. Why? Because you saw an opportunity. Remember, there are multiple reasons why people sell a stock, but there's only one reason why they buy. They only buy because they want to go up, because they want the stock to go up, or because they feel the stock will go up. Yes. But there are different reasons why they sell. It's not every time that a stock drops that it means the company is not good. Some could buy, some could sell because they need cash. If I sell a stock today and the stock is dropping, maybe that I need cash. Doesn't mean the stock is bad. No. So those stocks that are dropping, those stocks that are tanking, that are selling at the bottom of the market because investors have sold them to take profits out of fear, but everything is intact. That's the kind of stock you should be buying in the market. That's the kind of stock that makes money in the market, not stocks that are dropping because of bad financials. Now, you can see here, I hold the stock for 3 to 12 months. So when I buy a stock, my mindset is I'm going to hold the stock for 3 months. Why am I holding a stock for 3 months? Why not 1 month, 1 month, 1 or 2 months? Simple. When I buy a stock, no matter the fluctuations, the direction of the markets, up, up, down, up, down, up, down, like you see here on Honeywell or any other stock like livestock feeds, like livestock feed. You buy them, like here, we keyed in at 1.71. You can see it didn't go up on a straight line, up, down, up, down. So those periods that the stock will crash or the stock will dip, maybe you see them among top losers list or whatever and all that. Now, when you hold them for 3 months, what are you trying to do? Remember, every company are mandated to release their quarterly financials. Now, if you hold a stock for 3 months, eventually it will catch up with the value. Because if they release their financials in 3 months, then you will naturally see the stock reflect the true potential of that company. So a stock that has been down without any bad news, without any significant reason, just on profit taking, sell off, fear, but fundamentals are okay and everything is in line, economic, benefiting from economic events and all that. Now, when the stock releases its quarterly results, what happened? Automatically, the price will rise to catch up with its fair value or with what it's worth. So that's why 3 months for me allows the fundamentals of the stock to eventually take effect on the company's share price. So a company that is down, once it releases good financials, what happens? The price will pick up. That's why I do 3 months. So at least that way, if I say, oh, this stock is a sell, I'm not selling because the stock is down. The least reason I sell a stock It's not because share price is down. I sell a stock when financials are not okay. I sell a stock when they're not benefiting from economic events again. These are the reasons I sell a stock. So let's move to the next one. I always take profits, first profit of 15-20%. Now, if you look at the return I generate in the market, it's not because I allow my stock to do 300%, 400% per time. No. If you go back to our initial um, examples, look at these stocks. Now, Ikeja Hotel did 62% in 3 months, NEM 54%. So imagine, for instance, that you could do 1.6 times 1.6. If you compound the stock that is doing 62% like 3 times, that's over 300% in the market. That's over 300%. If you take out the capital one, 4.09 minus 3, that's almost minus 1, that's 3. So that is 300%. Meaning, if you can compound 62% 3 times, that's 300%. So imagine compounding this kind of gain, 62, 50, every 3 months, every 2 months, every 5 months, every 4 months. At the end of the year, you would have made good money in the markets. So when I'm saying 250 to 300 or 400, it's not about you looking for that big 1000% stock. No, the secret is compounding. So, but then you must take that profits. I don't joke with my first 15 to 20% in the market. If you're in my community, you will know we always take that first 15, 20% profit in the market. In short, it has been reviewed this year to 20 to 50%, which means less recommendation, but more quality trade and more returns this year. So that means that I will make sure I take more quality trades that will be at least give us minimum of 15 to 50% per time. So imagine compounding 20% for 1 year, every quarter for 1 year. That's 100%. Imagine compounding 30% every quarter for 1 year. Imagine compounding 40%, 50% or thereabout. It is possible. It is possible. ETF has shown that you can pick great stock in the Nigerian market, even when the market is down. Last year, the market was down. Let me show you something on the NSC market that a lot of us didn't actually pay attention to. Many of us are just excited that the market did 37%. But let me share some insights with you. Now, look at the bulk of the return as at December 2024. Let's go back to December 2024. Right here. Okay. Now, the bulk of the return as at December 2024 started in January. You can see here, January alone, the market did. Let me switch this to monthly so that you understand. All right. You can see January alone, January 2024, the market delivered 35%. 35%. Now, did you know that from February into November, the market had been down? The market was down. Can you see here? All share index was down. That means the bulk of the return that we generated or that we witnessed in 2024 was actually recorded in January. So, assuming if you take out this January performance from Nigerian stock markets, the market would have, in short, it would have been negative. It would have been negative. This is it here, or probably like less than 5%, 6%. So what does that tell you? It means that the bulk of the NSE All-Share Index performance was in January, and most of them were driven by stocks like, I think you see Dangote Cement did over 100% before it dipped. Now, the uptrend we're seeing right now again in January, you have to be very careful. You have to be extremely careful because look at what happened last year, 35%, and then from there the market dipped. So that's why I always advise that you take profit. Always take your first profit. Very important. Focus on compounding your return. Focus on compounding your return rather than doing 100, 200% because 100, 200% is possible but not sustainable. Not every stock can give you 100%. Most of the stocks that have done 100% last year, I can tell you, some of them might dip. Some of them might give up that sell-off into the market. That's why some people will come back to their portfolio like, why is my portfolio down? Why is it down? You must put your portfolio in a position where it can only go in one direction, and that's upward and forward. So I don't just buy stock and leave. I at least take that first profit because when you take that first profit, you build your wallet, you build your capital for the next trade. So when you have another stock to buy, you're not struggling to look for money again. A lot of us are so invested in the market that anytime there's a new stock to buy, you start looking for money to fund your account. That shouldn't be. That means there's something wrong because your portfolio and your wallet balance should be talking to each other. Your portfolio should give you that initial profit to fund your cash balance. Your cash balance should have enough money to buy into new stock in your portfolio. This will help you. Compound return is very, very important. Now, the other one is I always swap bad trade for better ones. I don't let my bad stock run for a long time. Always let your winning stocks run and swap the bad trades for better opportunities or new recommendations. So when I share new recommendations, always go through the stocks you have and see, are there bad trades in the market? Are there stocks that are dragging your portfolio down? Now, even when there's a stock that is dragging your portfolio down, it still doesn't mean it's a bad stock. How do you know what makes a bad stock? Number one, financials. Is financials okay? Number two, challenging macro trend. The company is no longer benefiting from macro trend again, or maybe they are losing market share or unimpressive guidance. Management is coming out and projecting or sharing a forecast below market expectation. Once this are happening, then it's time for you to move to another stock entirely. So when I see a stock not meeting my ETF checklist again, I sell and then move to another better one. That way, I keep my winning streak on that direction. I don't try to be right every time. Don't try to be right every time. This is important. I'm not in this market to be right. I am in this market to make more money. Being right and making more money are not the same. Many of us want to be right. Oh, this stock is down, is at 52 weeks low. Oh, let me see if I can catch it at the bottom. And then you enter there and you wait forever. That's wrong. You cannot time the top and the bottom of the market. Yours is to be part of that rally. Take your share of the profit, move to the next stock. See, the truth is there will always be opportunities in the market every now and then because stock prices go up and down. When I buy a stock, I don't care how long it will rally, but I focus on making realistic profits in the markets and move to the next trade opportunity. So don't look at the stock and say, oh, this stock will do 500%. Now, for instance, now a lot of people are on Owando now thinking Owando will do another 900%. You are setting unrealistic expectation in the market. The bottom of the Owando right now is just trying to consolidate, trying to find balance between demand and supply in the market. The first time we had that demand and supply setup was when it was selling for 11 to 12 naira. At the current price now, he's trying to find a balance. Once he finds a balance, it moves again. Now, I have mentioned an entry on the stock, but then we are still looking for another opportunity. Once it shows up again, now we're asking everybody to accumulate more of the stock once an opportunity shows up. So know when a stock is actually ripe or prime for capital appreciation. And that's where the stock has been beaten down and demand is coming again. So don't try to be. And when I enter a stock, first thing in my mind is I want to take that first 20 to 50% profit first in the market. Then let's watch what happens. By that, you make realistic profits. Some of us will say, oh, this stock must do 100%. Now, you are watching your stock move to 20%. You're saying I won't sell. You watch the same stock move to 30%. You said I won't sell. You watch it move to 50%. You say I won't sell. You watch it move to 55%, 70%. You say I won't sell. That, oh, it will get to 100%. And suddenly the stock crash back again. And then you're wondering, now you're now looking for a way to sell. And you're saying you can't sell because the stock is on full offer. Yeah, I don't know the color of your greed. But then, like I said, I don't try to be right. Now, I compound returns aggressively. I've said it before. Compounding my return is the surest way to achieve 150 to 300% or more in Nigerian stock markets. Even if the naira depreciate against the dollar, like we saw in 2024, naira dollar depreciated against the naira by 74%. Your triple digit return will outperform the US dollar exchange rate. Like I shared with you, imagine achieving 150 to 300% return in the markets. Now, imagine now having a diversified portfolio where you are trading Nigerian stock and also you have USD portfolio, or maybe you have USD in maybe, or you are saving in USD, or you have some USD assets. By the time you carry this portfolio over in the next 5 years, you know what you're talking about. You're leveraging exchange from one end, and then you're also compounding your return on the other end. So people that are saying Nigerian stocks are not profitable again, Nigeria, when you buy Nigerian stock, you lose the value of your money to exchange rates. Please, you need to get the right knowledge. You need to wash that mentality off you. People are making good money in the market. The market rewarded investor with over 22 trillion naira last year. My question to you is, how much of it did you get for yourself? So when you compound return aggressively, you make good money in the market. That's the secret. So when you say you can achieve 200 to 300%, it's not because I want to show you one stock that will do 200%. No, it's from compounding that gain 1.5 times 1.5 times 1.5 times 1.5. Now, that means if you do an average of 50% every 3 to 4 months in the market for 1 year, if you compound it, you will do close to 400%. So that's why I like to go with a realistic figure of 150 to 300%, because at the end of the day, I think 20%, 30% is more realistic than saying 50% every 3 months. Now, does it mean you can't do 50% every 3 months? Very possible. I just showed you stocks that did almost 50% in just 3 to 4 months in the market. And it's possible that more will come. Now, those 50% you're saying there, I know how to repeat that return. That's one thing I like about my strategy. I know how to repeat that same return. It's very simple. All these stocks were benefiting from economic events. Number one, all these stocks emerged from the bottom of the market, and all these stocks had good fundamentals. So if I want to pick the next 50% stock in the market, what should I do? Look for stocks that are benefiting from economic events, look for stocks that are emerging from the bottom, and look for stocks that have good fundamentals. If all these three things are in place, then you are good to go on your portfolio. So, like I said, I don't try to be right in the market and always compound gain. So let me do a recap of my playbook in Nigerian stock market. First one, I have an investment objective, meaning that I want to trade the stock. Second one, I don't chase stocks. I allow stocks to come to me. So I use my ETF model. The third one is I hold stock for at least 3 to 12 months. The fourth one is I always take my first 20%. 50% in the market. Then the fifth one is I swap bad trades for better one faster. And I've told you what makes a bad trade. And then I don't try to be right. That's the sixth one. You're in the market to make money. Focus on making that money and leave. Don't compete. Don't think, oh, people have entered MTN at 170. And then if I enter at a higher price, I've lost money. It's a lie. Trade the stock and make money for yourself. Don't compete with anybody. Next one, I compound my return aggressively. So if you put all this particular playbook on your checklist or in your mind whenever you trade Nigerian stock, you will see the effect on your portfolio. If you want to join our community and you want to catch the latest stocks in the market, both the ones we are buying for both long term and short term in Nigeria and US stock markets, go to glowfollow.com/subscribe. Pick a plan that works for you. We host monthly webinar and share market insights before the media. This Sunday, we are hosting our first webinar for the year. You can't afford to miss it. This Sunday, our webinar has been moved to second Sundays of the month. So this Sunday, we are having our monthly webinar, the first webinar for the year. We host webinar January, February, March, April, May, June, July, August to December. Yes, I do that because I want you to be up to date on what is happening in the market. We've done that for a long time. We did that in 2024. We held our webinar back to back. And a lot of members that followed my recommendations, that followed my insights for the year, they were able to grow their portfolio. So I am inviting you to join Glowfolio today so you can be part of the few happy investors that are making money in Nigerian stock market. And if this is the first time you're watching my channel, but watching my video, kindly hit the subscription button and turn on the notification bell, because I'll be releasing the next video I'll be releasing will be a free stock to buy. So watch out, subscribe. I'm going to drop a free stock for everybody in my community. So please watch out for that recommendation. Thank you.